Hello all, welcome to my channel. My name is Prajakta Bapat. Today's topic is buyback of shares. In the previous videos, we have discussed about what are the reasons for buyback and what are the conditions to be followed at the time of buyback of shares. Today we are going to discuss about what are the sources of buyback. Now buyback refers to purchasing back our own securities for which company requires money to be paid. Now this money is usually a huge amount in terms of lakhs or crores of rupees. So they require this huge amount which suddenly cannot raised. So there are only two sources for buyback. Now, one must understand that if I want to buy back shares, if company wants to buy back any of the securities, company cannot get this amount through borrowing money, through borrowing loan from the bank. You cannot take a loan from bank or any other financial institution, meaning loan cannot be a source of buyback. So there are only two sources which are available. First source is free reserves, that is divisible profits, which is in bracket it is given CRR, which is called as capital redemption reserve. We are going to discuss in detail about this. And the second source is fresh issue of securities. Let us first discuss about the free reserves. Now free reserves meaning which are called as divisible profits of the company. Now every company has their own reserves or have accumulated profits. Now, whenever company makes any kind of reserves, every reserve has a purpose on its own. For example, if you take example of sinking fund, it has a particular purpose. But once the purpose is served, it becomes normal free reserves. Okay, divisible profits which can be used for the general purpose also. So there are two types of reserves which I have mentioned here, which is meant for the general purpose and which is special reserve, but the main purpose is served. So there are two types of free reserves. First reserve is which is meant for the general purpose itself. For example, general reserve. You can take example of general reserve or profit and loss account that are meant for the general purpose itself. And second is special reserves which are meant for the special purpose only, special reason only, but the main purpose of that is served. For example, if I prepare sinking fund account and that is nothing but accumulated amount I have and which is meant for the specific purpose, but once the purpose is served, that becomes, that remaining amount becomes your free reserves, okay, or divisible profits. So what I'm going to do is, what company is going to do is, company is going to count on such all reserves, company is going to add on such all reserves and see that how much amount they have. Okay, if they have 4-5 reserves, that 4-5 reserves are like a source for you, source for buyback. That money will act as a source for buyback for you. That all money will be collected together in a one pot. It is like a pot. That will be called as your CRR, capital redemption reserve. We are going to see how this happens, meaning accounting treatment of this in the next video. So this first source of finance, it comes from the inside company itself. It happens within the company itself. Okay, so this capital redemption reserve is created specifically only for the buyback of securities, and it is created from which all reserves? So all free reserves. So all free reserve, 4-5 reserves will be taken together in one pot which will be called as CRR. Now second reserve is source is fresh issue. Now what is fresh issue? Let us discuss. Fresh issue of securities. Fresh issue meaning it will act like a normal issue itself. How we issue securities, shares, debenture, it's same like that, but the purpose of this issue, this time issue will be to get the money which will be used for the buyback. Now this is also one of the important source in case of buyback, but then the fresh issue decision depends upon your CRR. If you have enough free reserves with you, you will not go for issuing new securities. If you don't have enough free reserves, you will have to go for the fresh issue. Now that depends upon company. Sometimes company maintain 50% of the CRR and 50% they issue new securities. That depends upon every company. Now, fresh issue of securities meaning it's like a normal equity issue or preference issue, but here we have one very important condition. What condition we have here is, if I buy back, if I'm right now in the process of buying back equity shares, then I cannot issue the same equity shares itself. I may issue preference shares, I may issue debentures, bonds, or any other securities. But the securities which are in the buyback process, that same securities cannot be issued again. The reason behind this is, if I am buying back equity shares, meaning I am trying to reduce the equity capital, and again if I, on the other hand, if I issue fresh equity shares itself, meaning here you are reducing your capital and here you are increasing your capital, meaning the purpose is not served. Okay, that's why if you are if you are buying back equity shares, you can issue debentures, okay, which will balance your debt equity ratio. That's why this condition has been put. So, but you can go for issuing other securities at any time. So, these are the only two sources which can be used. One is free reserves, another one is fresh issue. That's it for the sources of buyback. In the next video, we are going to see a very important part of academics, that is accounting treatment of this buyback. And we are going to discuss even about the sequence in which you will write your journal entries so that you won't miss any step. Okay, thank you.